All right, let's get right into it. We're going to talk about a company that on the surface looks, well, honestly, it looks incredibly boring. We're talking about sanitaryware. Toilets, faucets. But trust me, hidden inside this seemingly dull business is this powerful, powerful secret. It's like a behavioral monopoly, and it is absolutely fascinating to unpack. So yeah, let's do this. So let me kick things off with a question for you. Think about your own home for a second. What's worse than a really expensive mistake?
The answer? A humiliating one. Seriously, think about it. If your brand new, expensive TV just stops working, yeah, that's super annoying, right? But what happens when your toilet springs a leak right in the middle of a party you're hosting? That's not just annoying. That is a whole different category of failure. And that single emotion, humiliation, it changes the entire economic equation.
That right there brings us to our first big idea. The humiliation of failure. See, we're not really just talking about porcelain and pipes here. We're talking about the truly unique economics of a very high-stakes, very personal space.
Okay, so let's really break this down. A bathroom, it's not like buying a toaster, right? You can't just toss it out and get a new one. The replacement cycles are just incredibly long. We're talking 15, maybe 20 years. And like we just said, when things go wrong, it's public, it's embarrassing, and it's messy. But here's the absolute kicker. The rework cost. Just imagine this. The cost to literally break open a wall to fix a tiny leak in a pipe, that cost is astronomically higher than the cost of the pipe itself. So when you put all that together, what do you get? You get an environment of extreme risk aversion. Nobody wants to get this wrong. So if you, the homeowner, are absolutely terrified of making the wrong choice, who actually calls the shots? Who holds all the power? Well, that brings us to the hero of our story, the plumber. The plumber is king. And this is the absolute crux of the whole thing. For a company like Cera, the real customer isn't you, the person writing the check. Nope. It's the plumber, the person you trust to get it right the very first time. They hold the ultimate veto power. And their motivation for choosing one brand over another? Oh, it's intensely personal. This whole dynamic creates something we can call plumber default behavior. It's a really simple idea. Plumbers tend to stick with the brands they already know and trust. And why wouldn't they? Think about it from their perspective. Getting a callback to fix a leaky faucet, that's not just an hour of their time wasted. It's a direct shot at their reputation. It's the customer thinking, did I hire the right person? So trying out some new, unproven brand, that's not a small decision. It's a huge career risk that most of them are just not willing to take.
So let's get inside a plumber's head for a second. What's their mental checklist? Okay, step one, and this is the most important rule of all. Avoid callbacks at all costs. That is their prime directive. So how do you do that? Well, you need predictable, compatible parts, stuff you've used 1,000 times before. You also need to know for sure that you can get those parts locally, like right now. And when you add all that up, where does it lead? To step 4, default to a brand you already trust. See, it's not laziness, it's just smart professional risk management.
Okay, so if we accept that Cera's real customer is the super risk-averse plumber, then what is Cera actually selling? And this gets us to the absolute core of their business. They aren't really selling porcelain. They're selling risk avoidance.
And this just lays out the difference so clearly. On one side, you've got the commodity brands. What do they sell? Ceramics, faucets. And they compete almost entirely on having the lowest price. Cera? They're playing a completely different game. They're selling risk avoidance. They're selling a complete bathroom solution, which is huge for a plumber because they know everything's going to fit together perfectly. But the most important thing they sell, the real product, it's plumber trust. You can't see it, you can't touch it, but it is by far the most valuable thing they've got. And once they have that trust, that's when they make their move. This is a classic wallet share expansion strategy. They get in the door with their main product, their anchor, which is sanitaryware. That's about 40% of their business. But from there, they start cross-selling faucets, tiles, all the other stuff. I mean, think about it. Once a plumber trusts Cera for the most critical part, the toilet, it's just so much easier to say, you know what, I'll just use Cera for the whole shebang. And just like that, they've locked out all their competitors from the entire room.
And this is how they get their pricing power. Yeah, sure, a homeowner might see 2 toilets and think, hey, I can save 500 rupees by going with this other brand. But the plumber, the expert in the room, knows better. And they'll be the first to tell you that 500 rupees saving is completely, totally irrelevant when you're staring down the barrel of a 10,000 rupee bill to break open a wall just to fix a stupid leak. Suddenly, the math changes, doesn't it?
The massive cost of failure makes these small price differences totally meaningless.
Okay, look, that's a fantastic story. It sounds great, it makes sense, but a good story isn't enough, right? The numbers have to actually back it up. So let's pop the hood and look at the financials, because at the end of the day, cash does not lie.
I love this chart. You can think of it as the ultimate lie detector for a business. What we're doing is comparing two things. Earnings, that's the profit a company says it made, and cash from operations, which is the actual cash that came in the door. Now, in a healthy, honest-to-goodness company, those two lines should track each other pretty closely. If you see earnings going way up, but cash is flat or down, that's a huge red flag. It often means they're just stuffing their sales channels with product that isn't actually selling to real customers. But with Cera, you see this beautiful alignment. It proves the growth is real. It's actual cash in the bank.
All right, next up, we've got a number called Return on Capital Employed, or ROCE. And Cera's is consistently above 30%. Now, to put that into perspective for you, a lot of really good companies would be thrilled to get 15 or 20%. So what does this number actually tell us? It means that for every single rupee Cera puts back into its own business, building a new factory, improving distribution, they generate an incredibly high return on that investment. It's just a crystal clear signal of a really high quality, well-managed, and super profitable business. And this next part is so important. The business runs on a net cash position. What that means is it's not funded by debt. This is absolutely huge. Why? Because when an economic downturn hits, or when the cost of raw materials suddenly spikes, they don't have to panic. They're not beholden to a bank. They don't have to start doing stupid things like massive discounting, or even worse, cutting corners on quality, the very things that would completely destroy the brand trust they've spent decades building.
So, you take this powerful brand, this plumber-centric strategy, these fantastic financials. What does it all add up to? Well, I think you can call it a thesis of boring, durable dominance. But what does that actually mean if you're looking at this from an investment perspective today?
Well, let's be really clear about this. The first thing you need to understand is that Cera is not some hidden, undervalued gem. The secret's out. The market gets it. The market understands the quality of this business. So it's pretty fairly priced for the trust and the longevity that it brings to the table. This is absolutely not a stock you buy hoping for some quick 50% jump. The way you make money here is through slow, steady, patient compounding over a very long time. Now look, no business is bulletproof. And for a company like Cera, the risks might be few, but man, are they severe. I like to call them kill switches, because any one of them could basically break this entire investment thesis. What are they? First, a major product quality failure, something systemic. That would be absolutely catastrophic, because plumbers, they have very long memories. Second, panic discounting. If they ever started slashing prices just to move product, that would signal they've lost their nerve, and it would just erode all that brand trust. And finally, a shift in management's focus. If they went from being careful custodians of the brand to chasing some kind of ego-driven, grow-at-all-costs strategy, yeah, that could undo everything they've built. So, after all that, what's the big takeaway? What's the bottom line? It's simply this. This is boring dominance, built on a foundation of pure trust. Cera's power doesn't come from some flashy Super Bowl ad or some crazy new technology. It comes from being the safest, most reliable, most predictable choice in a decision where failure is simply not an option. At its core, this is a business built on helping people avoid humiliation. And it turns out that is one of the most powerful, durable moats you can find.